Today is a history maker and a warning all at once. 17 years after a single white paper changed money forever, governments are dark, grocery prices are eating at your paycheck, and one of America's busiest playgrounds is suddenly emptier than ever. The world is signaling stress, and Bitcoin is reminding us it never sleeps. If you want the headlines explained and the playbook to protect your family's future, stay close. This episode ties politics, prices, and the white paper together in plain language. You do not want to miss it. What's up, family? It's Coach Masi, and you're locked in to the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, stay disciplined, and stay ready for opportunity. Let's dive in together. I'm glad you're here. The U.S. federal government has now been shut down for more than 30 days, and in a few days, it will be past the record for the longest shutdown in U.S. history. Essential services keep running, but thousands of workers are basically furloughed or unpaid, and agencies are operating on fumes. This is not a political talking point. It is a real drag on economic data, airport operations, regulatory clarity, and consumer confidence. No matter what side of the aisle you are on, this is happening in real time. So why does this matter to markets in Bitcoin? Two reasons. First, the shutdown creates a data blackout and policy uncertainty when you don't have the data. Investors hate both. Second, when government services stall, the private sector feels it. Delayed contracts, slower approvals, and weaker consumer-facing programs. That reduced clarity increases risk premiums, and risk premiums make volatility, and assets like Bitcoin and stocks are more likely to be volatile. Let's talk about groceries. The industry trackers and foods, well, at-home prices are feeling the pressure. Let's just put it that way. Prices are being stubborn. They're going up, and people are feeling the heat from paycheck to paycheck. And households are paying roughly 5% more for basics than a year ago, according to recent industry analysis. For families on tight budgets, that is not a rounding error. It changes behavior at a checkout stand and affects consumer spending across the economy no matter where you're shopping. Practical example, when food costs climb and wages do not keep up, families sacrifice discretionary spending first. Restaurants, entertainment, travel. They get cut. That reduction shows up in corporate revenue for consumer-facing companies, and it reverberates, basically, in earnings reports and stock prices overall. And now let's look at Vegas. The data is clear. Visitation in 2025 is meaningfully down. Basically, you can tell there's 2 million less travelers to Las Vegas than last year put together. You can tell through airports, hotel stays, restaurants, and so on. It's a big deal, and it shows maybe the canary in the coal mine of a recession coming. Vegas usually gets hit first. And that's why it matters, because Vegas' sensitivity to consumer leisure budgets makes it an early warning indicator for broader discretionary spending. If people stop traveling for fun, the earnings of restaurants and those hotels and casinos and event venues come under pressure. That feeds back into jobs, local tax revenue, and national GDP through the service channel. Again, 17 years ago today, Satoshi Nakamoto published a Bitcoin white paper titled Bitcoin A Peer-to-Peer Electronic Cash System. That short technical analysis laid out a plan for solving double spending using a peer-to-peer network and proof-of-work time-stamping system. It was the blueprint for a monetary system that needed no central gatekeeper. The paper is short, but the implications, well, they're massive. So what did the white paper promise? Three simple, profound things in case you didn't know 17 years ago. Digital transfers that do not require a trusted middleman. A public ledger so everyone can verify balances without a central authority. And scarcity enforced by code instead of promises. You see, 17 years later, the Bitcoin network is still operational and still decentralized at scale. People forget how rare that is. Centralized systems fail. Governments pause or shut down. Corporations have outages, but Bitcoin keeps producing blocks, processing transactions, and maintaining the ledger thanks to thousands of independent nodes and miners around the world. That resilience is the point, basically. It's the proof of concept in motion. So let's connect the dots. When the public loses faith in institutions, people look for alternatives. When the government is shut down and consumer prices climb, trust in the ability of policymakers to manage money and supply reliability is strained. Bitcoin's key value proposition in that environment is simple. It does not need permission and it cannot be turned off. It is not immune to price swings, but its operation does not depend on any single office or agency around the globe. So for all viewers, that could mean two things. One, Bitcoin can act as a portfolio diversifier against policy risk and fiat debasement. And two, Bitcoin's existence forces institutions to respond. The more resilient the network proves, the harder it is for policymakers to ignore the demand for alternatives. When you put it together, a prolonged government shutdown, grocery inflation that hits the wallet share, and weaker tourism in major consumer hubs all equal downward pressure on corporate revenues. Earnings season is the market's truth moment. So when companies report miss after miss, the market reprices risk quickly and sharply. That repricing hits leverage, credit spreads, and asset prices, well, across the board. So for people watching at home, that means watch earnings calls closely. Look for language about consumer frequency, pricing, and power for the demographic and demand. Those are all signals whether a company can pass costs on to consumers or whether it will lose volume. Look at Chipotle, like I said the other day. So what should you do as a disciplined investor or a family protecting wealth? Well, here are some actionable steps, even though they're not financial advice. Hedging your cash exposure, keeping an emergency cushion in short duration, maybe covering 3 to 6 months in case of shutdown or things drag on. Watching real signals, not headlines. Looking at same-store sales, hotel occupancy, airport, and CPI food components, basically. Those metrics tell the real story. You could be dollar cost averaging into your positions, as volatility is basically a price for opportunity. And if you're in Bitcoin, you know that it's sound money, and make sure you only use disciplined buys. And lastly, diversify. Having multiple streams of income helps reduce tail risk. So when you're staying informed and you're avoiding panic and you're not being rushed into some conviction you don't trust, you're going to be okay. So of all the stories today, which one is it for you? The government shutdown, the rise in grocery prices, the drop in travel and tourism? I want to hear from you. Drop your thoughts in the comments so we can discuss it. And in this episode, I hope you see the big picture. And if you do, hit the like button, subscribe to the channel if you haven't already, and share this with someone who loves Bitcoin news as much as you do. Again, this is for educational purposes only, not financial advice. That's your Daily Hodl. Stay sharp, stay disciplined, and as always, go Dodgers. Lead.Pray.Hodl. I'll see you in the next one. Any Canada people out there? Throw a comment in.